Thank you for that introduction, Paul. Clearly, you as a media person, you have a great face for radio. Look, what I want to talk to you about today is a little bit about our journey, and I was reflecting back to June 2019 and what we said and where we were positioned back then. I think I was in a role for around 4 months at that point. And hopefully we painted a picture of where we were going to take Mincor. And certainly if you weren't allergic to money, you would have bought some Mincor shares. And it might not be a cure for the coronavirus, but it certainly would have helped your back pocket. I think our market capitalisation is up 4 or 5 times since that point. So certainly we've been on a pretty strong journey. I want to talk to you about the third wave of nickel. Okay, and not to be confused, there's too many corona analogies here. It's not the second wave. Okay, hopefully we manage our mining better than we manage hotel quarantine. But if you go back and turn back in time to the 69, 70s, you had the discoveries that were made in Kambalda for nickel. And then in the 1990s to 2007, Western Mining operated a number of nickel mines, made some discoveries, and then divested those into companies like Mincor, Independence Group and Panoramic. And the third wave, which I'm calling now from 2019-20, is Mincor 2.0, where we've got a discovery, the first discovery in Kambalda in 20 years. And you've got to remember, this is the most prolific nickel sulphide belt in Australia by quite a long way. And we're funded and we are development ready, and in fact we are developing as we speak today. So we are permitted, we're off and running, we've got our mining contractor mobilised, we have a reserve, we've announced a DFS. Our market capitalisation last night was 414 million. Nickel price went up 4%, so of course your share price should go down by 4%. As a consequence. So look, there's always these things that happen. We have a pretty interesting register. Wyloo Metals, who you see there at 15%, is one of the private investment vehicles of Andrew Forrest. So that reports up to Tatarang, which is then part of the Minderoo Group. They've bought shares on market and also participated in our raisings, but just to put the size of Wyloo Metals and Tatarang into perspective, their value, as they sit here today, is greater than ANZ Bank. Okay, so it's a fairly good shareholder to have behind your name if you want to do things. And then also we have Independence Group, who own 8% in Mincor. And they have been very supportive since they took an initial stake when we purchased the long operation off them, which I'll talk about later. But they've built up that stake to 8%. And cash at bank of just over $100 million. And I think when I was talking to you this time, well, back in June 2019, we were somewhere around $10 million. Now, our strategy is pretty simple. It's all about discovery, development, delivering on those promises and doing it diligently. Now, there is a fifth D, but because of ESG and all those very important things, I didn't put it on there. But if you think of how the Sydney Swans, about what type of people they don't bring into their team, and you also think about the All Blacks, because I am a Kiwi, okay, so I've got a couple of chips on each shoulder, but the type of team members that they don't bring into their team, it starts with a D. And that's certainly what that could be. And so we're very conscious about the people that we bring into this organisation, and we have been employing multiples of very eager mining engineers about to fire a portal at Cassini for that discovery. But this is an evolutionary thing. We are now back around to looking at discovery, and I'll talk about Cassini North, and I'll also talk about what I refer to as the golden mile of nickel. So a little bit of a conveyor belt and a little bit of truth serum about what we promised when I was here when I was in the Gold Coast in 2019. You know, the one prediction we got wrong, and I was playing to the audience, that Queensland were going to win the State of Origin. Well, they lost, so I do apologise for getting that one wrong. But if you then have a look at the conveyor belt of achievements since that time, we've delivered multiple resource upgrades, delivered a maiden ore reserve. We signed a binding processing and sales offtake agreement with the world's largest miner who need our product, and I'll talk about that very quickly. We've raised 100 million nearly from the market, because guess what? These mines do not fund themselves. You have to find the money to be able to do that. And by the way, with each raising, it's always been at a higher price. Okay, so the first raising was at 40 cents. Today, I think we closed at 92. We've also secured accredited-approved term sheets for financing, and I'm going to go through that very quickly as well. We released a DFS. We promised that we would release a DFS in March. Now, if you turn your mind back to March, did I want to release a DFS in the middle of a COVID-19 pandemic? Absolutely not. Worst time to release the study results, but we did, because that was our promise. We've now started building. We're well funded. So one of the things that happens when you go into development as a mining company, investors, and certainly institutional investors, tend to get a little bit bored, especially when you're building things. You go through this little bit of a maybe lull in news flow and a bit of a boring news cycle. We've made sure that we've raised enough money that we can explore and we can extend our resources. So there'll be two sets of news flow that we'll be looking to announce, which along and resource extension and development progress. So I thought I'd just a couple of happy snaps of what's going on right now. You've got the COO and one of our directors looking very happy in front of a brand new underground haulage truck, which is going to Cassini. You can see there the Cassini box cut. That's probably the last time you'll see it like that. We are very close to firing that. A brand new twin boom jumbo underground rehabilitation at the Otter Decline. And for those historians, the Otter Decline is arguably first or second oldest decline in Australia. It was so an amazing place, and the ground conditions there are superb. I want to touch on BHP just for a moment. And this is a cornerstone. We had to have a processing route for our product, and we had to have a sales route. So how on earth have we been able to come out with a DFS with only CapEx of $68 million to then end up producing 16,000 tonnes of nickel in concentrate? Part of that is the agreement. We get to use BHP's nickel concentrator. We pay for that privilege on a per tonne basis, but that cost is as if we're the owner of that infrastructure. We don't have to maintain a tailings dam. We don't have to build a tailings dam. So really all of our CapEx is about building the decline infrastructure, and that's why our CapEx is so cheap. And when you see the DFS results, that's why our payback on capital is in 12 months' time. But it's also about strategy. And if you have a think, this is a flow sheet of nickel in Western Australia, excluding Ravensthorpe, because that's laterite, and laterite's a dirty word. We don't talk about laterites. And excluding Panoramic. They're up in Savannah and Export and are not within the BHP system. But BHP is one of the world's largest nickel mining companies. Now, it's only a small part of BHP, but certainly BHP have fallen back in love with nickel. But there are two mines at Mount Keith and Leinster that you see on that graph. They produce a nickel concentrate, but it's not of high quality, so it can't actually be smelted. So what they rely on at the moment is concentrate that comes from Western areas and also from Independence Group, who sell it into the dryer, and they end up blending it at the smelter with the poor quality concentrates of BHP. Well, if you look forward a year or two, there's going to be a few issues with supply of concentrate. BHP do not have enough supply from third parties. We come in, we use the nickel concentrator at Kambalda, which is designed specifically for Kambalda ore, which is our ore type. So we get to use that, and we then produce nickel concentrate, which can be blended with BHPs to produce the type of matte product out of the smelter that the market needs. What then happens, it goes through to the nickel refinery, and the nickel refinery is currently being converted, so the bulk of nickel produced will be nickel sulfate that goes into battery storage or electric vehicle batteries. So we are very strategic. BHP need us to be up and running, and so they've been very supportive of us. But also from that strategic sense, our ground holding is also really interesting, because BHP have been out buying the odd nickel project. And guess what? Our Kambalda, up the top there of that map, our Kambalda tenements are right beside BHP's. And I can tell you, komatiite lava channels do not respect tenement boundaries. And so, you know, there can be an ore body on one side of a tenement and an ore body on the other side of the tenement. And I'll talk you through that shortly. But where we are, you know, we're right next, half of our production that we'll have is within a driver and a 6-iron from the Kambalda concentrator, so very short haulage distance. And the Cassini discovery is around 60 to 70 kilometres. We're right next to the main highway to the east, we're right next to the water pipeline, we're right next to grid power, we're not right next to rail, but we've also got access to workforce. So a little bit about Cassini. Being the first discovery in Kambalda in 20 years makes us pretty special. And we're only on the start of what we think Cassini could possibly be. And again, I have one of my favourite graphs for you for that. We've had some of the highest grade nickel intersections in recent history over good widths. And our all-in sustaining costs for Cassini will be around $3.80 Aussie per pound. The current nickel price Aussie per pound, just before I hopped up, was about $9.80. So very good margins associated with Cassini. So we think we are on to potentially an emerging nickel camp. And if you have a look at the history of Kambalda discoveries, when you find one deposit, there's generally a few around the place. But we've defined the ore reserve, and you can see in red there the resource. What we'll be doing next is, once we've developed the underground infrastructure, we'll be drilling from underground. And that's how Kambalda deposits grow, drilling from underground. But in the meantime, we've started to target Cassini North, and we had a very significant intersection there. Very similar to how we discovered Cassini Main, where we intersected 2.5 metres at 6.6% nickel. So if I was to put that in copper terms, that's like hitting 17% copper. That's also the true width. And that's only 260 metres deep. It's only going to be 700 metres adjacent to the infrastructure that we put at Cassini. So let's see what happens there in the future. Now, this is my graph for being a non-geologist. There's certain rules that geologists are governed by around production targets, and this is our way of not giving a production target, but giving you a snapshot of how Cassini could look. Basically, what this graph shows is all the blue bubbles there on the left-hand side is where the resource started before mining, except for Long. Long was when IGO took it over. But look at that, once they started mining, they all ended up being 3 to 4, and one of them to over 20 times larger than the initial discovery. And so there you've got Cassini, our first resource, and one of the resources in November, upgraded again in June. You can see how high grade it is. So the question is, where can it possibly go once we start drilling underground? I'll leave that question with you. Then what I call the golden mile of nickel, which we are particularly excited about. And very quickly, think of this as Korea, okay? In the history of Korea, you had North Korea on the left, which is the Long shaft, and which was, North Korea was IGO. And on the right was Mincor, South Korea. And then in between there was this demilitarised zone when no one could get together and talk. And what we've been able to do now, both companies in the past actually looked to see how could I how could I get into this area together and explore? But they could never agree. We now control it. In that image there, over 1 million tonnes of nickel has come out from 6 kilometres, and not one hole has gone into 1.1 kilometres. So you think about that, the best place to find more ore bodies is next to ore bodies, and we're going to link up those deposits with our underground. Now, I'm starting to run out of time, so I won't go through the DFS, but I will touch on very quickly. We have signed credit-approved term sheets. We have ESG approval. We're now going through documentation with BNP and SocGen. You can see the interest rate there at 3.7%, very competitive. What that means, it's got through credit, and if you're ever involved in banking, credit departments are often known as the deal prevention department. Okay, it's where they stop everything. You never invite them to parties because they're a little bit depressing sometimes. What that shows is that we've got very high credit because that's not far off mortgage rates. And so what to expect over the next 12 months? We're going to have exploration news flow. There'll be first ore, there'll be development photos, there'll be lots of people being happy and holding hands. Nickel is a happy metal. Remember that. Gold is a misery metal. Okay? Nickel is the happy metal. It's all about growth. Go out and buy a Tesla. Okay? So 50 kilos. 50 kilos of nickel in a Tesla. So, you know, I can see a few brokers and bankers out there, Don Inglis, who can probably afford a Tesla because I see him stealing money off people at golf clubs most weeks. So make sure that you go out and buy a Tesla. I won't talk too much about the nickel market other than if you follow anything about electric vehicles, if you want distance in your electric battery, you need nickel. If you don't want distance, well then nickel's not relevant, but everyone is moving to high nickel content batteries. Don't you love a graph that always goes up? The only graph that you don't want to go up is your costs, okay? But this is a graph showing how much nickel demand could be in the future for electric vehicle batteries. If you think about it, only 5% of today's nickel demand is from batteries. So in summing up, in final words, we're in a pretty good location. We're right near people and infrastructure. It's very rare to find a nickel sulphide deposit with high grade, and I can't think of anything in the last decade or two that's turned into a resource. There's plenty of fantastic intersections around at the moment. High margins, funded, pretty simple strategy. We've got a partner in BHP who needs our product, and we think that we'll have the timing right. So I'll probably leave it there.
Thanks very much, David. We do have one question. If you were in production now at current prices, what would your cash flow look like?
It would be somewhere around the $100 million mark.
So where would that leave you on a valuation basis?
That would be 4 times EBITDA, but on an EV that would be 3 times. What it would say is we're significantly undervalued.
Based on full production at the current price?
Yes.
Right. Thanks very much.
Great. Thank you.